Well, good afternoon and welcome to today's webinar from FS Club on transforming retail banking to meet evolving customer needs. And I'm delighted to be joined today by one of our sponsors. We love giving sponsors airtime, but it is amazing how generous they are at letting so many other people talk. And today, Richard Callis is going to be chatting to us about what's going on in retail banking, particularly at the technology interface. Richard's Client Solutions Director at GFT, and we're really delighted to have you here today. Thank you.
It's a pleasure.
Now, you'll know me, I'm Michael Mainelli, I'm one of the chairmen of Zien, and as I said earlier, we can only run so many of these webinars because of the generosity, tolerance, may I say, of our sponsors who allow us to range widely and freely across technology, economics, and finance. And of course, today is at the intersection of all three of those, so very much about GFT shaping the future of digital business, very much about the economics and the finance aspects of it. So thanks to all of our sponsors for allowing that. Now, today's format will be well known to those of you who've come on our webinars before. My job is to get out of the way as quickly as possible so you can hear from our expert. Richard has been in this space for quite some time, not least having studied computer science. As he was saying to us in the green room beforehand, it's very much I've managed to turn a hobby into a profession, which is superb. 3 points of housekeeping, if I may, before we begin. Firstly, yes, the slides will be available. In fact, already are available up here. Secondly, yes, this is being recorded. And thirdly, how do you participate? Well, you participate in the question and answer by using the GoToWebinar Q&A facility. Richard and I are both here with you. We're not on WhatsApp or Signal or WeChat. We're not watching our emails. We're not playing with Twitter. We are here, so use the GoToWebinar Q&A. And that Q&A facility does mean that Richard will get a copy of all of your questions, comments, and observations in a day or so and can respond to you directly. So if you just want to know more about GFT or what have you, just type in to the Q&A facility. During the course of the presentation, Richard would like to take a couple of soundings from you. So there will in fact be 2 polls that will be running through this presentation. And all I can say is I'm particularly looking forward to this because I do think that the digital transformation in banking has frankly possibly only just begun. For those of you who are looking at the various things to do with ChatGPT or DALL-E, I think we're only just scratching the surface of the human interaction with digital businesses. So Richard, with no more ado, the floor is yours.
Okay, thank you, Mike. So, transforming retail banking to meet evolving customer needs. So today we're going to explore some research that we've been doing, looking at customer sentiment and how that actually translates into the response that the retail banks and the retail banking sector need to consider. So if we move to the next slide, please. So GFT is a technology engineering company offering specialist application, cloud and data services and solutions for organizations around the world. We've been in the industry for over 35 years and have grown to 10,000 specialists operating in 15 markets globally. Our service predominantly focus on digital transformation, and that's primarily for the banking sector. We've a lot of expertise, which is why it's led us to move into this research and understand how we can best service the industry and what the industry needs to do in order to change and respond to those evolving customer needs. We've a number of large global organizations that we count as our customer base. We've also implemented new digital brands and disruptive brands into the market, such as Mox in Hong Kong and Trust in Singapore, both of those for Standard Chartered. These banks focused on delivering an excellent experience to the customer with elevated net promoter scores. But as a result of these experiences, we realized that even though many surveys existed targeting banking services and customer attitudes to those banks, there was nothing that really questioned how customers interacted using digital services, their experience of them, and how they compared to expectation. If we move to the next slide, please. So today we see the cost of living crisis creating real world pressure for customers around the world, and in turn posing difficult questions and choices of financial services providers. the digital native banks have been able to adapt far more rapidly to deliver real-time services that can support and inform the customer. More traditional banks still grapple with legacy estates that impede more rapid and agile responses. GFT therefore commissioned the Banking Disruption Index. This is a quarterly survey panel that provides us with a barometer of customer sentiment and satisfaction towards digital banks, products and services. The BDI allowed us to understand the levels of support that customers currently receive and would like to receive from their banks. Over time, we'll be able to track the changes in attitudes to understand that evolving customer needs around sentiments and services. Next slide, please. The initial research reinforced some of our existing thinking and knowledge, yet it highlighted other more interesting findings. A high percentage of 48% of customers indicated a lack of trust in their bank to provide that support that they needed to manage their finances. This was surprising, but it indicated something of interest, that there was clearly a breakdown in the relationship between the customer and their bank, or that the customer simply didn't view their bank in that trusted advisor capacity. So it's an area that the banks must address and look how they can improve. They're primary to the way that many customers interact with their money. So it's important to see how they address that breakdown. We've seen an increasingly high percentage of customers, with 67% stating a preference to use digital channels for their everyday needs. Yet the sentiment again indicated customers are comparing their banking services to other retail services providers, and they feel there's still more for the banks to do to address that. It's clear that this points to a pivot in customers where they're demanding more innovation, more digital, more technology, and more services. So the neobanks look set to benefit unless the traditional banks are able to rise to this challenge. So this is especially stark when you consider the high percentage that are worried and concerned at the impact the economic downturn might have on their banks and savings. Indeed, recent events have only sought to highlight further the remaining weaknesses in the global finance sector. We've seen banks, including leading global brands, once again fail. So if we move forward to the next slide, please. So let's explore, let's have a poll, sorry. I'll pass to you, Michael, please.
That's great. So we're going to have this very first poll question, which is, how do you feel the increased use of digital channels and less to face is affecting customers' trust in their bank? So please just select one of them. Is it more digital channels is increasing trust, no change or difference, or more digital channels are reducing trust? And as I sort of warned you, Richard, our audience is quite opinionated. Well over half have made up their minds. We'll just hold it up for a few more seconds while people come off the fence. And in fact, everybody has come off the fence. So let's present those results. And it was quite interesting because Richard and I weren't 100% sure, but according to this, fair preponderant number of people believe that 55% that more digital is reducing trust, rather than 35% who's increasing it and 10% who say there's no change. Richard, what are your thoughts on that?
So that's an interesting response, actually, because as we discussed earlier, I think if digital is viewed as reducing trust, then clearly I would say that highlights a negative sentiment in terms of personal feelings as to how digital has been perceived historically. Certainly, I would see that digital is actually improving that trust through greater transparency and understanding and insight. It's interesting to see how we can take that forward and respond to it.
Well, it's interesting as well, because your banking disruption, your initial research said that basically 50% of consumers would not trust their bank to manage their finances. So
yes.
Yeah, maybe they don't trust them to manage their technology as well. But let's proceed, because this is a really interesting point for GFT, isn't it?
It is. Thank you. So if we look at this, our banking disruption index, we actually pivoted to look at how consumers view digital services at a time with cost of living crisis. So our latest banking disruption index focused on that cost of living crisis. So next slide, please. So we launched the survey in January to gauge that sentiment towards digital channels and how they're considered in respect to providing financial support and assistance. We wanted to understand how customers viewed the services they currently received and their preference to the service channels they use to interact with those. It provided us with an opportunity to ask customers where and how they might like to receive other support, such as budgeting, insights, and guidance on their finances. Next slide, please. We looked into consumer anxiety, which has been a key feature of much media coverage, and it was something we wanted to explore in more detail. So a very high percentage indicated that they felt anxious when actually checking their mobile apps. So looking at their bank balance, for example. This sentiment rose considerably for younger responders, with around 86% of 18 to 35-year-olds expressing feelings of anxiety. It was slightly higher again for 35 to 44-year-olds at 87%. Now, interestingly, in the results, customers of digital banks that provide real-time spending information were less likely to express anxiety when accessing the app. So this does show that more interaction and insight is a positive force for the bank's relationship with the customer. So if we go to the next slide, let's explore how those needs can be addressed. So it came as a surprise that more than half of customers, around 57%, were interested in their bank proactively contacting them if their spending habits pointed towards future financial difficulty. This figure rose to around 66% for 25 to 34-year-olds. And we know that the younger audiences and younger generations are more comfortable with sharing their data with the big tech providers in order to receive free services. This indicates that they're also happy for the banks to similarly act with their data if that means they receive the free value and insight that that gives them. We also wanted to consider how customers might like to interact with their bank in event of a bad financial situation. And it was surprising to see that 43%, which was a far higher figure than I expected, wanted to interact with their bank through digital means for assistance, overtaking those that preferred physical communication via phone or in person at a branch. And we found that quite an amazing statistic, that if you're in financial difficulty, you would actually like to communicate digitally with your bank rather than actually have that in-person meeting. So actually that one-to-one in-person discussion around how you might be able to resolve that. But I think this is simply because of evolving customer behavior as well, where there's been a societal change, I think, where life has become one ongoing digital conversation, whether that's through social media with friends and family, or WhatsApp and online chat with various utility providers. People are just used to interacting now, I think, with those chat services for that conversation. And having banks form part of that conversation is only a logical evolution. So I believe, next slide, please. So if we look at the digital tools that customers would like the banks to offer and how they might help them manage their finances through the economic crisis, 26% said they would like to have the ability to flag and track upcoming bills and expenditure. They wanted to ensure that they had sufficient funds available to pay them. 22% wanted regular spending insights, with a further 21% actually wanting more frequent real-time notifications of events and activities. Those banks not able yet to surface these events from their back-end systems will have to quickly evaluate how they achieve this to meet this growing customer expectation. Finally, we looked at credit and split financing facilities like buy now, pay later. 14% of consumers have yet to use any sort of buy now, pay later service, but expressed an interest that they would do so if their bank were to offer it. In this respect, given the visibility of customer spending across all merchants, the banks are uniquely placed and have the ability to offer this to customers in a way that individual merchants cannot. So we found that quite interesting to see that notion of the bank actually facilitating things that have traditionally disrupted their business. So next slide, please. I believe we may have a poll.
Oh, Michael, you just unmute the moment.
You're on mute, Michael, sorry.
Yes, just before we begin that poll, Hugh Purser's asking, what is the universe size of these surveys?
2,000, a panel of 2,000 across various geography, various regions of the UK, and different demographics and age groups.
Okay, super. Well, our poll question 2 is the continued evolution of customer functionality with new products and services is the prime method of ensuring customer loyalty. Do you strongly agree, somewhat agree, disagree a bit, or disagree strongly? And again, Richard, as you'd imagine, this audience is very swift off the mark, 50% already, didn't even hit the 12-second mark, now up to 3/4. And we're just going to display those results. And interesting. So basically, people are broadly in agreement that customer functionality with new products and services is the prime method of ensuring customer loyalty. Any thoughts on that, Richard?
I would agree. The more that the products and services evolve, and the more transparent, open, and accessible that organizations make themselves to consumers, then I think it will actually ensure that customer retention and increased loyalty. Especially when we look at the likes of Starling Bank and Monzo, who demonstrate some of the highest net promoter scores in the UK amongst the banks, simply because they actually do offer those products and services customers are asking. They also relish feedback from customers, so it's not just the bank providing the information to the customer, they're actually seeking information from the customer for feedback.
Great. Well, back to you, Richard.
Okay, thank you. So if I look to conclude, a large majority of customers still have a relationship with their main high street bank. Whilst these are investing substantially and making strides to renovate their technology, they still lack the agility of the newer digital native banks, as I say, like Starling, Monzo, or even electronic money institutions like Revolut. They're more engaged with customers, I think, and they're able to respond more quickly to their evolving requirements around services and address those. And this is important as we see this growing customer demand for more digital services and greater levels of communication. It'll be interesting to see, I think, how all the banks are able to respond and rise to this challenge. And I think those that can will secure and maintain that long-term customer loyalty. Next slide, please. So I've covered some of the highlights from the current banking disruption index and our previous banking disruption index, and given my thoughts around what I think the banks need to do in order to respond to those findings. But I invite your audience to have a look at our site, visit our site, download those full reports. They provide insights, and obviously I can be contacted, and I'm more than happy to provide any further information and detail around those, and continue that conversation.
Well, that is super. We've got thank you very much for that, Richard.
Thanks, Michael.
And we've got quite a few questions and comments to get going. Folks, do get your questions and comments in quickly, because we've got quite a few people online. But Richard, just to start things here, could you give us an example of the sort of work that GFT is doing right now to enhance digital presence and capabilities?
Yeah, so as I've mentioned already, we've implemented digital banks for Mox Trust in Hong Kong and Singapore. We've also implemented Al Rajhi Bank in Malaysia, and we're currently working with a number of large organizations, both in the US and the EU, to deliver digital banks for them into multiple geographies.
Okay. Corinne Clark is curious, who and what are neobanks?
So neobanks is, Forgive me, you're absolutely right, and it's a very good question. So neobanks is an industry phrase coined to describe new digital banks that are essentially mobile only.
Okay. And we've got a question from an Alan Sargent, who I think might actually work in your neighborhood, who's curious what sort of awards have GFT won for helping clients?
Thanks, Alan. So we have won many financial services awards, especially around MOX and our partnership with Thought Machine in the digital banking space. And a lot of those are around excellent customer service, providing innovative new features and functions. So thank you.
Okay. I was interested to see, that we have times that are tough. In fact, my sort of running sick joke at the moment is that, as an economist, I'm steeped in supply and demand curves, and so I find it interesting that despite the rising cost of living, people are still interested in living. But anyway, let's not go there. But at this time, your survey seemed to indicate that despite how tough it is, many more people prefer to communicate digitally if in financial hardship rather than visiting the bank and speaking to a real person or speaking on the phone. Any thoughts on what's driving this?
Well, as I said before, I think it's driven by a societal change that a lot of people's daily routine now is driven by digital conversation, whether that's across social media with friends and family, or whether that's online. Most retail services and utilities actually offer the ability for you to chat with them now. So essentially, you're just moving from one channel to another, and the method of communication is the same.
Hugh Purser's curious again, aside from digital apps, etc., one of the disaster areas in banking and other industries is telephone communication. It's a nightmare trying to get through to speak to someone directly to help solve a problem or answer a question. How do you tackle that?
So interestingly, if you were to speak to an organization like Starling Bank see their customer contact as being part of their product and service rather than a support feature. So they actually have chat so that you can instantly connect through to an agent within their organization, and they operate that without any telecoms or queuing. So they provide instant access to their employees, and they provide instant communication back to their customers. And they're able to do that very effectively because they've designed their entire operation around that ethos. And I think when you start looking at those digital services, and rather than it being a support function you tack on the side, you embed it within your entire operation for that digital engagement with your customer.
Back in 2000, we had the Cruikshank report on the state of banking in Britain. That report highlighted a number of things. One, it confirmed the observation often made around dinner tables that we change our spouses in Britain more frequently than we change our bank accounts. It also pointed out, though, that when somebody was completely and totally hacked off with their bank, they've been stuck in a Turkish jail for a year because the credit card had bounced. Their daughter was caught out in Malaysia with no ability to get cash. Blah 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 blah. When they finally decided that they wanted to move, they moved to only one of the other three banks that had bricks and mortar. So the biggest decision was bricks and mortar, and that was in a day when we had we had the online services from First Direct and all. So what sort of advice would you give banks in terms of getting people to move to digital if they're still so bricks and mortar based? And 22, 23 years later from that report, the same three banks still control 75% of the personal current account sector.
Well, it was interesting actually over the last few months. So Martin Lewis actually did his report how customers could actually save money by switching banks, and Starling and Monzo benefit as a direct result of that. I think at one point they were onboarding over 30,000 new customers a month. But interestingly, to your point, Nationwide also saw a big uptick as a result of the advisory note from Martin. So that was interesting to see. So it did demonstrate that it's not only the new banks and the digital startups that are benefiting. People are switching when they need to other large name banks. I actually did an engagement recently with a bank within the European continent, and one of the things they were talking to me about was account switching, and they were exceptionally envious of the UK's current account switching scheme that actually enables customers to be able to move their account and all of their standing orders, direct debits, etc. electronically. They saw that as being a fantastic plus in a sort of buoyant economy and with operating with choice.
Well, a bit like you, I laud that, and you know, the open banking initiative maybe hasn't met its hasn't really quite done what it said initially, but it's still a move in the right direction. However, last time I looked, I think if you straight line the challenger banks, it was around 2100 when they achieved a full 10% market share, which does seem, you know, quite slow progress. I still think we need to shake things up. But Clive Bullen would like to move on to another area. As you move digitally, of course, you become more vulnerable to the cyber issues. And Clive would like your comments on banks' concerns about the dangers of being hacked and other digital problems. And are there any good sort of structural or architectural solutions to this?
There are many, actually, and probably far too many to discuss on this call. There are solutions, obviously, from organizations like Palo Alto and Prisma Cloud. So there are many approaches you can take to tackle this. And obviously, the fundamental question for all organizations is what level of security or what level of risk appetite do they have? I can certainly provide a lot more information on this topic and introduce to the relevant people who can go into that in a lot more detail. More than happy to do that.
Okay, super. And then we have a question here from Ashley Winton. Could you please speak to the role of and competition of intermediary digital financial services providers, that either open banking like services, e-money, PSP, to encourage disintermediation of the customer from legacy banks?
It's interesting, actually. It's a good question, because I think payment services is an area that is very hot at the moment, and especially around cross-border payments. So there's a lot of intermediary disruption around low-cost overseas transactions, and I think what we'll find is we'll find more information around how customers are actually viewing that as a result of the next banking disruption index that will focus specifically on the area of cross-border payments and international spending, and how intermediary providers can actually assist them to actually benefit from those low costs.
Well, you've touched on something that does interest me, the Banking Disruption Index version 3. You mentioned it's about foreign and cross-border payments. Could you just give a bit more detail on some of the questions you're exploring?
Yeah, so we're looking to sort of, with a view of forthcoming summer and people planning holidays, overseas vacations, for example, and trying to explore their level of knowledge and understanding of the fees and charges that are actually, you know, applicable to those transactions that they make when they're overseas. It'd be interesting, I think, to find out whether customers actually are fully aware of how much money transfers cost them or how much individual transactions cost, depending on different providers. So it will be interesting, I think, when we get those results, to understand what that level of knowledge and understanding actually is.
Okay. And one of the things I find interesting, it was in your conclusions slide, you mentioned that the pivot in attitudes towards digital only and that these banks have made it easy and intuitive for their customers to tell them what they need. But how much do you think it's not a question of digital versus non-digital, but it's more about being able to successfully weave together the multiple channels?
Mm-hmm. So I think we will see. I think we will see a massive change in how those channels are pulled together. Certainly, the big tech firms and in particular Apple and Google, who own the ecosystem through their almost monopoly and tight control of handsets, I think we'll start to see a lot more disruption from those players around bringing all of that together with different players.
Yeah, it's interesting because I wonder how good they'll be at it. I mean, both digital and Apple have broadly built themselves without any human interaction. But I must say, I do bank in a few countries, and in all honesty, there's one country, it's in Europe, where I find the banking service superb because the bank, just this bank I'm dealing with, seems to get the digital human bit quite right. So I can use the app, I can ring them up, I can be online, I can call them back, and it's very seamless. I'm extremely impressed with the quality of service. Whereas when I ring a UK bank, one, I have to go through the steam engine. I can see the steam engine driving the the banking system behind it. And then when I ring somebody, I go through endless security procedures, which is pretty obvious. I'm trying to sort the same problem out. So interesting. I'm very curious about that seamless element, which leads me to a question. Of course, I opened with the current hype going on about Chat GPT, and from OpenAI, blah blah blah. Any thoughts on what that means both for banks and what it means for your business?
I think there's some very exciting innovations and improvements in technology about to happen as a result of ChatGPT and GPT-4. It's astounding how they are able to provide, answers to questions that can actually be quite deep and challenging. Whereas, traditionally we've become used to searching information by asking search engines questions and receiving pages as responses for us to continue to explore. And I think we will see that level of technology emerging within the banking sector as well. So understanding the financial insights and asking questions of your finances with something that is highly trained and can actually give you that financial advice in a way that is very succinct and very sincere, and actually will give you an open and honest advice, I guess, around what you should do. And I think it will actually create a significant shift in attitudes towards banks, banking services, and that level of advisory.
Okay. Chris David is curious. Why do you think it is a bit with me here? Why do you think it is that new digital and neobanks have not really disrupted or made significant inroads into the customer base of traditional banks?
I think that's to your point, Michael, where people don't see the need to move their banks. They get a simple service from them. They're perfectly happy, and in many cases, they don't actually understand many of the hidden charges. I think in the UK, we benefit actually from having free current account services, and I think if the banks are forced into a position where they actually have to start charging for those services, then we will actually see the digital banks accelerate dramatically if they can offer that in a lower cost fashion.
Chris David is curious as well. Will the current banking crisis be positive or negative for the transition to digital banking? And he asks, when will we see a major traditional bank system fail? When, for example, its 1970s code finally gives up? I hasten to add, that wasn't a planted question for me, so thank you, Chris.
It's a good question. I think the UK banking sector, by and large, is actually fairly well insulated. I think the changes and experience that were learned after the previous financial crash and the enhanced liquidity requirements on banks, I suspect the UK sector will actually be by and large okay, providing I think that what's going on at the moment is largely contained in other geographies. Obviously, notwithstanding any further dramatic shocks, but I think if we look at the digital banks, for example, their cost base and cost to income ratio is significantly lower than the bigger traditional banks, and their exposure to the markets is significantly less. So I think when people start to explore that and look at that, I think that will also encourage some transition where people want to move their money and their savings, and the digital banks will actually start to be viewed as less exposed, I think, because they have that lower cost.
Okay. Brian Howard would like to know, given the media focus on financial scams, does your index explore consumer concerns about the increased risk of personal losses by banking digitally?
We haven't actually explored that question, but it is a very good one, and certainly the area of financial crime is something that we do want to explore in a future index. So I'd be more than happy to actually have contacts on that and explore more area if you'd like, so we can actually find out how we can position the panel so that we can actually understand that specific area in more detail.
Okay. Now, one of the things that I find intriguing is the discussion on digital exclusion. So people keep regaling me with tales of, you can't move this way because people will be excluded. Personally, I feel competition could explore a lot of that. But a number of people would say that going wholly digital is excluding people without, without online services and things. How do you respond to that?
So it's interesting actually, because there was a lot more challenge around digital exclusion, I think, pre-pandemic. I think the pandemic, one of the sort of benefits of that was that actually we saw this transition of certain sectors of the society that would actually fall under that category previously, actually found themselves having to embrace that digital environment simply to be able to go about their daily business, and certainly around their banking. So I think we can start challenging that digital exclusion argument slightly more now, in the face of having seen it overcome.
Well, I'd agree with you. I mean, one of the interesting facts was that in the first 2 months of lockdown, 6 million people in Britain, 6 million. So, more than 10% of the population, what was that, 15% of the adult population, accessed their online bank for the first time. So
Yes.
far more than any marketing department has ever done in 2 months. It was, if I need to do it, I can do it. So there you are.
It did demonstrate that if needs must.
Yeah.
People will find a way.
Yeah. And to what degree do you align with some of the initiatives out there like fair banking and stuff like that on the ethical banking? You mentioned payments and savings earlier, and so some of these programs to help students save, to help older people save, to do budgeting. Are you aligned with any formal programs?
I'm not aware that we are aligned with any formal programs, but we're a large organisation, and therefore I can certainly take that away and explore that, and perhaps come back to you and provide you with that information. It's certainly something that we would be eager to explore.
And you operate internationally, which is of course great because you get a breadth of experience. But help us here. How would you categorize the British banking market? In a variety of areas. Is it advanced, mediocre, poor, or are services pretty much bog standard? Are they leading edge? Are our customers exhibiting wildly different characteristics, or does everybody around the world feel the same about digital banking?
I think we are. I think we were ahead at some point in recent history. I think we are trailing slightly as a result of being ahead, if that makes sense. So we had the launch of the new challengers within our market, like 10 or so years ago. And of course, since then, we've seen the explosion of cloud services. And I think other markets have actually been able to leverage those cloud services to leapfrog the UK in some of those digital banking areas. I think also our experience in the UK of things that were seen innovative, such as open banking and around PSD2, have allowed other markets as well to take those and actually use lessons learned to be able to demonstrate, how they can do that at pace and actually then extend those services. Brazil, as a prime example, copied not just the idea around open banking, but the entire UK open banking specification to implement it in their market, and subsequently extended that to cover the whole area of open finance. And that's something that might be re-imported back to the UK.
Yeah, I mean, to me, it's interesting because I was involved in the open banking in the very, very early days, and I feel it went a little bit off base. It was actually meant originally to give you, the customer, the ability to control your own data, and now it's been we the banks will swap data about you amongst ourselves. But that's quibbling. But I would agree that there's some amazing bits of simplicity out there. One of the ones I love is in the German system. If you want to pay somebody, they print an invoice, no QR code or anything special, and you put it on your ATM terminal, and it says, "Do you wish to pay such and such travel company, 500 euros?" And you go, "Yes." So it's amazing stuff out there if you want it. But I think British banks are beginning to catch up again. There's been a sort of a wave where I do agree with you. I feel we've been quite behind. Or I remember judging the Banking Technology Awards, and somebody was trying to explain to me how this would never work, and I said, "Well, I'm afraid it does work all over Brazil." So there you go. But it rises and falls. Meanwhile, just on a question here from a number of points, really, we've got this cost of living crisis heating up, and one of the things that we spoke about with your team was a question to you, really. Do you think that more customers will switch banks for new pieces of functionality, such as notifications, saving pots, or buy now, pay later, because of the cost of living crisis? Or do you feel that people will kind of pretty much just accept where it is?
I think it will be a mixture, actually. I think you will certainly have a proportion that will look and seek out new savings products and new lending facilities, and they'll seek those that they find cheapest that can help them in the short term to actually get through sort of these short-term blips, especially around the energy and actually being able to sort of meet that cost of living. I think longer term, the customer base will remain, I think, largely with the more traditional banks, simply because you have a population that view those as being the stalwarts, and therefore they are safer. But I think that will change slowly.
Well, Richard, sadly, we've come to the end of our time, but I must say it's been really, really interesting. I hope the audience has learned quite a bit about transforming retail banking to meet these evolving customer needs. I think as well, it's nice that we're informed by your two surveys, and looking very much forward to your Global Disruption Index 3, which sounds fascinating because it will really be global about international payments. And if I can, then I've got three quick rounds of thanks. Firstly, to our sponsors, and it's always nice to thank a sponsor. So thank you very much, GPT, for not just appearing, but also sharing some of your research with the community out here. As ever, I need to thank our audience. If you're looking ahead, no need for me to really repeat much because it's all on the website. But I would point out that we've got some interesting things this very week. Sir David Omond, who used to run GCHQ, will be talking about working upstream of crisis on Wednesday, and then on Thursday morning we have the launch of Global Financial Index 33. So lots ahead just this very week. But as ever, go to the website. But my most sincere thanks, Richard, has to go to you and your support team. You've done an excellent job of preparing for today, and I think you can tell from the sheer quantity of comments and observations and questions you've really engaged the audience. And I think we'd also all be darn curious in learning about the indices that you're creating as they go into the future. These surveys are, I think, crucially important. Looking forward to international comparisons and other things as you build this out. And I appreciate the fact that you're giving back to the community by sounding out how people feel. So thank you very much personally.